At the end of 2023, I did 2 videos with regards to fintech companies. So here's my update, part 1 already. We're going to talk about PayPal, Adyen, New Holdings, and StoneCo. Part 2 will be about Block, SoFi, dLocal, Robinhood, and Affirm. What can you expect in these videos? A look at the current state of the company, valuation-wise, stock price, analyst expectations, and then if some of those companies have recently reported earnings and we did not cover that on the channel yet, I'm going to provide some updates with regards to that as well. So, first up, a major overview of the 4 companies that we're going to discuss in this video: PayPal, New Holdings, Adyen, StoneCo. We have here forward PE, price to free cash flow, and then price to earnings to growth. As you can clearly see here right now with regards to forward price to PE, the cheapest one is StoneCo at 12.3 times. Then we've got PayPal 12.7 times, New Holdings at 30 times, and the most expensive one is Adyen at 56.3 times. If you look at price to free cash flow, that's in the last 12 months. The cheapest one here is PayPal at 16.5 times. Then you've got Adyen at 27 times, StoneCo 28 times, and the most expensive one here, 45.2 times. So despite Adyen being the most expensive one on a forward PE basis, it's actually the second cheapest one on a price to free cash flow basis. That's why I always say just looking at a PE ratio to me does not make a good conclusion. Then if you look at price earnings to growth, we only get here StoneCo, PayPal, and Adyen. The cheapest one is StoneCo at 0.2, which is very, very cheap. PayPal at 1.35, still considered to be very cheap as well. Then Adyen a bit more expensive here, 2.75. Now, if we compare those companies since the last time we did this video, which was at the end of December 2023, we can now see that Adyen is more expensive than the mean since then. New Holdings more expensive as well. StoneCo is the only one that is a bit cheaper right now than back in December, or the mean for back in December. If you look at price to free cash flow, it's a bit of the same. The only one here that is a bit cheaper is PayPal, and then price to earnings to growth, a bit of the same for Adyen, PayPal as well, and StoneCo much cheaper. Now I'm going to go over now each and every company. Of course, if you're already satisfied with what you've gotten in this video, do leave it a thumbs up, subscribe if you have not, because a lot of you have not subscribed to the channel just yet. We're well on our way to reach 40,000 subscribers, so thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I'll first start with the most obvious one, which is PayPal. First up here, the analyst price target. The average analyst price target sits at $72.2, representing 11.03% upside from the price we're at today. I still think that a lot will change once we get the Q1 earnings numbers. Year to date, the stock is up just 5.89%. If you look at what the analysts are expecting for the coming fiscal years, a bit of the same top and bottom line, just fiscal year 2024, EPS growth to remain basically flat, but then reaccelerate to 9.89% year over year in fiscal year 2025, and then another 8.3% year over year growth in fiscal year 2026. As for top line growth, it's a bit of the same, between 7 to 8% year over year growth for the next coming fiscal years. Now looking at the graph right now, this is pre-market at $64. We are above the 20, the 50, and the 200-day moving average. Currently, this is on a weekly basis. So I would say that if we manage to stay above the 200-day moving average, that would be quite great until we reach the next earnings report. Up next, if we look at StoneCo, the average analyst price target sits at $19.10, representing 17% upside from the price we're at today. Currently, the stock is down 9.48% year to date. If you look at what the analysts are expecting for the next coming fiscal years, for fiscal year 2024, sales growth of just close to 4% year over year, but EPS growth of 32% year over year. And then we see a reacceleration in growth for the top line, about 11 to 12% for the next 2 fiscal years. EPS growth of between 17 to 22% year over year growth for fiscal year 25 and fiscal year 2026. Now for StoneCo, as you can see, at the bottom here in October of 2023, they had a huge rally up until mid-December or so, up 90%. Since then, as you've seen, the stock is down around 9 to 10% year to date. Currently, the stock does have an issue going above the 20 and the 50-day moving average, which sits at $16.7 or so. The 200-day moving average is slowly making its way back up to around $15. Let's wait and see if that can be a support line moving forward. Definitely a much better area, in my opinion, to add. But as you've seen, the stock right now is not expensive at all. Now, a couple of weeks back, they did report their latest earnings report. We did not cover that on the channel, so here it is, a quick overview. As you can see, the company is growing quite fast. Total revenue, adjusted EBIT, and adjusted net income, all growing quite fast. If we look at this is, by the way, micro, small and medium-sized businesses. This is a metric for them. So yes, it's true that their payments client base has increased quite a lot, but the number of new clients for the quarter has come down year over year and quarter over quarter. If we look at, let's say, pricing power, yes, we can see that for TPV has increased quite a lot, quite nicely. The take rate, though, is up year over year, but it is down quarter over quarter. They still expect it to be quite strong for 2024, but I don't think we could expect to see the same thing that has happened a year ago. If we look at cost and expenses, we can see that they're getting those under control across the board. As for cash generation, the adjusted net cash position increased by approximately 1.6 billion reals. That's up 44.8% year over year, with a positive evolution of 196 million reais or 4% quarter over quarter. I'll probably do a separate video talking solely about StoneCo in the future. If you're interested in that, do let me know down in the comment section below. Now, switching to another company in Latin America, it was one of my favorite companies to hold. Remember, I first talked about new holdings back at the end of 2022. It was around $4 or so. I recently sold out of my position. Why did I do that? Well, one, huge gains. Two, I wanted to increase my stake in Meli, which was already around 7% of the portfolio. It's now around 10%. So there is that, a little of consolidation happening for me. That's not to say that Nu is not a great company to have in your portfolio. Just for me, I had many positions. This one has increased, well, over 2x. So I was pretty happy with the performance there. Again, yes, I know you should not be selling your winners. 100% agree with that. I just wanted to have more Mercado Libre in my portfolio. Looking at valuation, looking at the size of my position, that was just my decision. I could make a huge mistake, but I do still think that Mercado Libre is probably one of the better companies to own, period. So right now, new holdings here. This is the average analyst price target, $12.15, representing 2.77% upside from the price we're at today. Year to date, the stock is up close to 42%. If you look at what the analysts are expecting for the next coming fiscal year, again, crazy growth for fiscal year 2024. Top line close to 39% year over year growth, EPS 63%, and then we're moving closer to the around 30% growth year over year top line, EPS 58% year-over-year growth for fiscal year 2025, then another close to 40% year-over-year growth in fiscal year 2026. If we look at the graph on the weekly, yes, the stock is overbought, has been overbought actually for quite a while. Maybe $12 might be a current top. It was a top back when it went public, so maybe this is one of the biggest cup and handle patterns in the making that you would see. Could very well be, I don't know, but you have to follow the business, and the business is doing quite well. Currently, the 200-day moving average sits at $8.72, 51 at $10.79, and the 20-day one at $11.66. If you needed a quick review from Nu's business, I mean, the amount of customers growth here throughout the years, tremendously. Now they have 95 million customers. That's up 19 million year over year, 53% of adult population in Brazil, 83% monthly activity rate. Revenue is up 57% year over year on FX neutral basis to $2.4 billion. Gross profit up 87% year over year. Gross profit margin 47.5%. Net income is up 489% year over year with an annualized return on equity of 23%. So yes, maybe I'll regret selling this one, maybe not, but I mean, a win is a win, and I do still think that I own a pretty big winner in Mercado Libre. Maybe if the stock presents a great opportunity in the coming months, I'm not saying that the stock will dip or something like that, but if it does, then maybe I might re-enter. But right now, I'm pretty happy with Mercado Libre. And now last company is a company out of the Netherlands. We've talked about that company last year after it crashed 55% or so, and that's Adyen. Of course, you can buy Adyen in dollars, you can buy Adyen in euros as well. Currently, this is the analyst average price target, sits at around 1,600 euros, which represents 2.1% upside from the price we're at today. If we look at the performance year to date, the stock is up 34.41%. If we look at the analyst expectations for the coming fiscal years, top and bottom line growth of around 25% year over year, each and every fiscal year, approximately. Now, if we look at the graph right now, we're back to where we were before they reported their earnings back in the summer of 2023. Remember, this is a company that only reports earnings first half and second half of the year. Now, what happened here? Big crash, we've talked about that. Basically, one, the stock was trading at a high premium, and the company was willing to take a short-term hit in profitability for long-term growth. So they're continuously investing in their own business, a bit of like we've seen with the local. The market, of course, reacted accordingly. We talked about the buying opportunity at around, $7 it was, or here, 650, 700 euros or so. Since then, the stock has more than doubled. The big jump came after their business update, where they still reaffirmed their long-term guidance, profitability, growth rates, etc., etc. Market really enjoyed that, and so we made our way back up quite quickly. If we look at their second half of 2023 figures, which were released back in February, processed volume was 544.1 billion euros, up 29% year over year. Net revenue 887 million euros, up 23% year over year. EBITDA was 423 million euros, up 14% year over year, with EBITDA margin landing at 48%. The figure was primarily impacted by team growth, which tempered as the accelerated investment initiative came to a close. Free cash flow conversion ratio was 93%, with CapEx at 2% of net revenue. As for the full year of 2023, processed volume was 970.1 billion euros, up 26% year over year. Of these volumes, point of sale volumes 159.9 billion euros, up 42% year over year. Net revenue came in at 1.62 billion, up 22% year over year. EBITDA of 743 million euros, up just 2% year over year, again because of the investments that they have been making. EBITDA margin was 46% for the full year compared to 55% in 22. So there you have it, part one of the fintech review. You've got great companies, some growing a bit slower than the others, but that's why they're also a bit cheaper. Then you've got others that are cheap, but also growing fast. And then you've got those that are growing quite fast, but are a bit more expensive. Which one do you own? Which one would you like to see more on the channel? Let me know down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.